Welcome to PhillipCapital's Weekly Market Watch. Recently, we saw the yen head higher after the recent win by the Democratic Party of Japan. As the yen is traditionally used as a carry trade currency for investors, where do we see the yen heading from here? Today, we have Mr. Dexter Tan, investment analyst from Phillip Securities, to share more. Dexter, so what are your views?
The yen is traditionally seen as a carry trade currency and is whereby investors borrow yen at low interest rates and invest them in higher yielding assets such as stocks and commodities, maybe possibly in real estate. But recently the DPJ win in Japan has probably set the stage for a higher yen currency in future. So in my view, I think the yen is likely to head higher. Also, if you look at recently, there's this advisor to the DPJ which said that a higher yen is actually positive for the country as it reduces the import costs and increases the purchasing power of Japanese investors. So, and also the second point for a higher yen in future is also because the Ministry of Trade in Japan has recently proposed a tax reform which would encourage Japanese companies to repatriate their yen back into their country. So if you look at the figures, the earnings retained overseas in FY04 is actually 16 times higher than the number of earnings retained overseas by Japanese companies in FY01. So there's actually a great incentive for companies to repatriate their yen back into their country. So if this reform passes through, and so you're likely to see more yen being repatriated and a higher yen currency in future.
So, with a higher yen in the future, do you see an end to the yen carry trade?
Yes, I do see an end to the yen carry trade. Carry trade is basically borrowing low interest rates to invest in high yielding assets. So if the yen continues to appreciate, the cost of borrowing is actually getting higher. So in fact, the Bank of Japan may even increase interest rates. So for carry trade candidates, there are two possible currencies. One of them is the pound. So the pound, right now, the Bank of England cash rate is about 0.5%. So if you look at the UK household debt, it's actually very high, and if you look at the size of the financial industry in the UK relative to the economy is also very high. So the possibility for higher rate cuts in the UK is actually possible, and so 0.5% may become even lower in the longer term. For the US, if the US commercial mortgage paper market collapses, then the Fed could actually cut interest rates. So the Fed target rate of 0.25% right now could also be lower or even be kept at this level for an extended period of time.
Given your outlook for a higher yen, where do you see the markets heading?
Okay, the yen and the risky assets tend to have negative correlations in the past because investors could borrow low interest rates and a depreciating currency to invest in higher yielding assets. So given the outlook for a higher, stronger yen in future, the outlook for risky assets is negative in the short term. In fact, I expect a healthy correction in the stock market in the short term. If you look at the number for the US unemployment last Friday was actually 9.7%. So this is the highest number in more than 2 decades. So usually when unemployment is very high, the markets tend to be very nervous, so corrections are possibly inevitable, but these are good buying opportunities for the longer term. So I think moving forward, the theme would be trading against the US dollar. So if the market hits higher, I'll be looking at investors could look at things like commodities because higher markets, better economic conditions will lead to higher demand for commodities. And if the markets head lower, investors could look to buying a Japanese yen against the US dollar because of repatriation of Japanese assets overseas.
Thank you, Dexter. That's all we have for you today. Tune in next week for more market updates.